All right, let's dive into Kaynes Technology India Limited. Fresh off their Q2 FY25 results, and we're going to unpack them. See what the numbers really tell us about Kaynes. We've got two main sources here. A press release, pretty straightforward, and then a full investor presentation. So, should give us a good look.
Yeah, kind of like getting both, the appetizer and the main course, right?
Exactly. But we're not just going to list off numbers. The idea is to really analyze, what this tells us about Kaynes, where they stand in the market, where they're headed in the future. So to kick things off, that 59% year-on-year revenue increase in Q2, that's got to catch your eye, right? That's not just growth, that's serious growth.
It certainly is. Yeah, I mean, the whole electronics sector is doing well, but 59%, that means Keynes is doing something extra, right?
They're not just riding the wave, they're ahead of it. And that kind of leads into the next thing, how diverse their revenue is. We're talking automotive, industrial, even aerospace and outer space.
It's pretty unusual for your average electronics company, that space stuff. And, they were involved in those recent Indian missions, Chandrayaan-3, Ajita-L1. That's high-tech stuff right there. I think it shows they're attracting a certain kind of client, one that needs that really advanced technology.
So it's not just diversification for the sake of it. It's they're deliberately becoming the leader in those high-tech areas. And if we look at the total revenue, it's a big number, 5,721 million. But big revenue is only part of the story, right? It's profitability that matters.
Absolutely, yeah. Got to make that money. What's really impressive here is the profit after tax, the PAT. It's up 86% year on year. Not just because revenue's up, their EBITDA and PAT margins are better too, so they're running things efficiently.
They're making the most of every rupee. Now, I'm curious, how do those margins compare to, the industry average? Are they beating everyone else?
It'd take a bit more digging. It's not in these materials we have.
Yeah.
But those margins going up while revenue's skyrocketing. That's a good sign operationally, I'd say.
Okay, so we've got growth, we've got good margins, but what about the future? Their order book, that's at 54,228 million. That's a lot of future business.
Yeah, a healthy order book is usually a good sign for future revenue. It means they've got work lined up, clients ready to go. The presentation doesn't break down what exactly is in that order book, though.
So we know they've got business coming, but we don't know exactly what kind of business. Would be helpful to know if it's all in one sector or spread out like their current revenue.
Definitely, yeah.
Yeah.
Knowing what that order book's made of and ideally which big clients are in it, that'd give a clearer picture.
Right. Something to watch for sure. Another thing I noticed, their working capital cycle, it's down to 108 days. That's an improvement. For manufacturer, that seems like a good thing, right? More efficient.
Yeah, shorter cycle means they're turning raw materials into cash quicker. Good inventory management, maybe good terms with their clients, helps keep things moving.
So it's not just growth and profit, they're getting smoother operationally too. What would you say are the core strengths that are making Kaynes so successful? Got to be something they're doing right.
Well, for one, their end-to-end capabilities, that's a big one. They can do design, engineering, manufacturing, even IoT stuff. Take a product from idea to reality all in one place. That's valuable these days.
They've got it all under one roof, huh? And they've got those 12 manufacturing facilities across India too, right?
Exactly. That's how they can scale up, meet all sorts of client needs. And they've got clients all over, global and domestic, been working with them for a long time.
Those long-term relationships, those matter, especially in this kind of industry where trust is everything. Okay, but how do all those strengths fit into the bigger picture? The whole electronics sector is growing like crazy. Automation, IoT, electric vehicles, it's all pushing things forward.
In Kaynes, with what they're focused on, they're in a good spot to ride that wave. Their setup, their revenue mix, it all lines up with where the industry's headed.
They're not just along for the ride, they're leading the pack. So what about the future? Does Kaynes management seem confident they can keep this up?
Oh yeah, they're aiming to meet their revenue goals for the year, and they're investing strategically in those high potential, high margin areas.
That investing strategically part, that's what really got me interested. The presentation's kind of vague about what those high-margin areas are, but they do mention expansion plans. A new facility in Chamarjanagar with a clean room and wire bonding, and another one in Hyderabad near the airport. Kind of makes you think, what's the strategy there?
It's like they're dropping hints, right? Those specific capabilities, that location choice, it tells you something about what they're after, what kind of products and services.
It's like a puzzle for our listeners, right? What needs clean rooms and wire bonding? What benefits from being near an airport? We're starting to see beyond just the numbers into how Kaynes is thinking strategically.
That's where the good stuff is, the real insights. And remember, they said they want to be a differentiated player. These expansions are part of that.
Yeah, but what does differentiated even mean in this context? Are they going for a specific niche within the whole electronics world? We've seen they're doing great, making smart moves, but what kind of challenges might they face along the way?
That's the big question, isn't it? Every company faces challenges, no matter how well they're doing.
Okay, now I'm really hooked. We've uncovered some interesting stuff about Keynes, their strengths, their position, some clues about where they're headed. But like you said, there's always challenges. So stick with us for part two. We'll dig into those challenges, the risk they might face, and how that could affect their success.
Welcome back to our Kaynes Deep Dive. So we spent part one looking at all the good stuff, the financials, their strategy. But no company just like exists in a bubble, right? There's
Yeah.
got to be challenges. So
Yeah.
let's talk about what those might be for Keynes.
You got it. Even with everything looking good, there's always things to watch out for. And in a sector like electronics manufacturing, competition is fierce.
They're not the only ones trying to get a piece of that pie. How does Keynes measure up to the other players out there? Well, they really emphasize those long-term client relationships and that diverse portfolio. Those are advantages for sure, but the industry's always changing. Got to keep up.
So, can't just sit back and relax, huh? What can they do to stay ahead of the competition then?
Innovation, that's key. Got to keep innovating. Invest in R&D, explore new technologies, figure out what the market's going to want tomorrow. They're focused on those high potential areas. That's smart. But everyone else is trying to do that too.
It's a race, huh? And those expansion plans, those new facilities, that's probably part of that, right? Keeping up their capabilities.
Yeah, those investments show they're serious about staying at the top. But expansions, they're exciting, but they also come with risks. Got to be careful.
Oh, yeah, for sure. What kind of risks are we talking about?
Well, for starters, those expansions cost money up front, a lot of it. Could affect their debt levels, and the presentation does mention their net debt's gone up. That's something to keep an eye on.
Yeah, it's a balancing act. Funding growth, but not getting in over your head.
Yeah.
What else could go wrong with these expansions?
Execution, that's the big one. Got to get it right. Building new facilities, integrating them, all while keeping everything else running smoothly, that's tough. Delays happen, costs can go up, unexpected problems pop up, and that all hits the bottom line.
Like a giant puzzle, and the pieces keep moving, huh? Got to make sure it all fits together. So we've got competition, we've got the risks that come with expansion. Anything else on the horizon?
Well, you always got to think about the global economy. That's a big one. Inflation, supply chains getting messed up, politics making things unpredictable. That all affects business, even one as good as Keynes.
Yet no one can control that stuff. It's like the weather. But how much would those global ups and downs really affect Keynes?
Well, their revenue's diversified. That helps. They're not reliant on just one market, so they can weather some storms. But even diversification has its limits. A global recession, or if their main supply chains get disrupted, that definitely hurt.
Right. It's about minimizing the risk, not pretending it doesn't exist. Speaking of supply chains, there's one thing that's got to be top of mind for any electronics company.
Oh yeah, semiconductors, those are the lifebloods.
Exactly. Those tiny chips, everyone needs them, and they've been hard to get lately. How's Keynes dealing with this whole chip shortage thing?
The presentation doesn't go into too much detail about their chip strategy. But you got to assume getting a steady supply of those chips, that's a top priority. If those supply chains dry up, that's a major problem.
Like a car with no engine, right? Everything stops. So we got competition, expansion risks, the global economy being unpredictable, and this whole semiconductor thing hanging over everything. It's a lot to juggle.
It is, for sure. But let's not forget, Keynes is a solid company. They've been around, they've been through tough times before. The key is they got to keep adapting, keep evolving.
Got to be flexible, got to react quickly, right?
Exactly. And that kind of leads into the question our listeners should be asking. What should they be looking for in the next few months, next few years, to see how Keynes is doing? What are the signs they're handling all this stuff well?
That's the real question, and it deserves a good discussion. So let's move on to the final part of our deep dive. We'll summarize everything and give our listeners a way to figure out what's next for Keynes. Okay, so we're back for the final part of our Keynes technology deep dive. We've gone through their performance, their strategy, the good stuff, the potential bumps in the road. So now let's kind of tie it all together. What does it all mean for Keynes going forward?
Well, we've seen a company that's doing incredibly well, but in an industry that's complex, it's always changing. So makes you wonder, what should our listeners be watching for? How do they figure out what's next for Keynes?
Right, we've thrown a lot of info at them, got to break it down, make it useful. What are the key takeaways, the things they should really focus on?
Well, first thing, can they stay competitive? Kaynes is innovating. They've got their niche. They've got those great client relationships. But that market's crowded. Everyone's trying to get ahead.
So keep an eye on their R&D, any new products, partnerships, that kind of thing.
Absolutely. That's the kind of stuff that shows they're staying ahead of the curve. Second thing, how's that expansion strategy play out? Those new facilities, those are big for their growth. But like we talked about, expansions are risky. Got to see how well they manage those risks, make sure those expansions go smoothly.
So watch for updates on how construction's going, any delays, cost overruns, and how it affects their debt. That's a big one.
Yeah, all those financial details matter. And of course, can't forget the stuff they can't control, the bigger picture. Global economy, supply chains, especially that semiconductor market, that's huge for them.
So got to stay informed, see how those trends might affect Kaynes, good or bad.
Right. It's all connected. And last thing I'd say, pay attention to the leadership, the people making the decisions. They've gotten Kaynes this far, but can they adapt? Can they make the right calls to keep this growth going?
Yeah, that makes sense. Look for consistent messaging, transparency. Are they proactive about dealing with risks and taking advantage of opportunities? That tells you a lot about the leadership.
Couldn't have said it better myself.
Okay, so that's the framework. Those are the things to watch. But before we wrap up, got to leave our listeners with one last thought, something to chew on. Kaynes is expanding like crazy, new facilities, new tech. It's exciting. But where is it all leading? What's the end goal here?
That's the question, isn't it? Remember, they said they want to be a differentiated player.
Right, but what does that actually look like? What's their specific niche? How do these expansions fit into that bigger picture?
That's what I want our listeners to think about. We've given them the info, the insights, the tools to analyze Kaynes. Now it's their turn to figure out what it all means.
I like that we're not just given answers, we're giving them the power to think for themselves. That's what the deep dive is all about.
Exactly.
So there you have it, folks, our deep dive into Kaynes Technology India Limited. We've covered their financials, their strategy, what they're good at, what challenges they might face. Now it's your turn to keep digging, do your own research, share your thoughts, what you think about Kaynes, where they're headed. Thanks for joining us on The Deep Dive. Until next time.